The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, how you doing here? This is Darrell Martin, your host right here on the Diagnostic Trading Hour. Glad to be back here. Been out for a bit. Going to be out a little bit late next week, too, out at the International Trading Expo there in Las Vegas. So maybe I'll run into a few of you there. I know Tommy said he's going to be speaking on Friday. He has a 2 o'clock session, so look him up in the roster book if you're out there, and make sure to stop by his class. I know I'll be checking it out. We got the S&P. It's up $1.25 right now. We got the Nasdaq up a quarter. Russell's currently up $1.30, and the Dow is up 43 on the day. Gold is currently up $2.10. Silver is pretty much flat on the day like gold is. We got copper up almost 0.5%. Oil pretty quiet, up only 17 cents on the day. Natural gas is currently up 0.039, so it's up 1%. Big mover right there. We got corn up $1.25. Soybeans, big move, 2% move, down 27 points. So definitely the market to be trading today. It did great. Ought to be chilling out pretty soon. We got euro dollar currently up 24 pips. We got pound dollar up 28. We have the Aussie dollar up 41. Euro yen is up 55, US yen is up 23, and pound yen is up 85 pips on the day. And then looking over at dollar CAD, it is down, let's see, what do we got? A mere 7 pips, and dollar franc is down 12 pips on the day. We have a potential trade. I was looking, I know some other people already looked at it and took advantage of it. About a potential trade setup, just looking at gold, this little pattern that's going on over here. And, I mean, you can see this major level right here of resistance. I mean, just for an hour hanging out there, that was a great trade going into the 1 o'clock. I know some traders took that one. But you could still take advantage of it doing a premium collection trade, selling a $12.90 for a $1.30 expiration. Okay, so there still is some opportunity there. If you want to go in and, potentially put that trade on, you got about 1.7 points of, cushion where you could go in and do the trade. And get that in for, about $20 right now, give or take, as the market fluctuates. But you could grab some of this, again, that's selling the 12.90s right there. So right there, 12.90. So as long as the market stays below 12.90 between now and 1.30, if it gets up there, then you're going to want to hop out of the trade. Right around $50 to $57 would be your exit point where you want to be hopping out of that trade. And let's look at where everything else is at on the day, and we'll talk about what's coming up. Looking over at the FX, we'll start there. We got the Aussie dollar is currently sitting just above its half deviation level on the day. So half deviation really right at the 0.7 at the moment. So not just a massive move, but it is a Friday, so things usually a little bit quieter across the board. But I did get a solid 0.7 move, and almost, getting pretty close to a 1 deviation. If you go high to low, might have actually had a full deviation. And that's one thing people a lot of times will forget to measure. Is just, look at that settlement, take that all the way up to the 1 deviation mark there. You got 59 pips. Go over here from low, and then go to high. Got about 66. So we actually broke the 1 deviation mark from low to high. All right. So now moving on over, checking out the euro yen and seeing where that's at. I got basically the same move. Got a 1 deviation, low to high, sitting right now at the 0.7 level. And we'll go down to euro dollar. We'll see. Is this going to be a consistent theme here? All right, euro dollar dropped a little bit more. Ran up to the 0.7, but pulled back. We have a little over a 1 deviation move total, but getting a decent pullback and just sort of chilling out at the moment. Looks like it might want to be heading down. Going on over to the pound yen. We have had a deviation level to the pound yen, and we'll have to add in a couple others as well. We'll see if they're in there. I know I put in the order for them to be in. But we got a solid move of 1 deviation, pretty much to the tick. Look at that. Just ran right up to it for pulling on back. This is using implied volatility in a standard deviation model, but instead of using standard deviation and using historical price movement, we're using implied volatility for an intraday unique deviation formula. I was taught by a floor trader. Works really well for calling expected moves. As you can see, just moving like right to that level and then bouncing right off of it. And again, going for that 1 deviation move on most days. Now, a couple other pairs that have come in the mix. We got Aussie Yen, which we now have, and check that out. They're now in there because Nadex now offers the Aussie Yen to trade. And so we have the deviation levels built in, everything, so you can go in and check those out and check out their accuracy from day to day and see how they've worked. But today we're sitting right at the 1 deviation mark on the Aussie Yen. And another new pair they've added in. Let's see if this one's in. Got Euro Pound. So Euro Pound, look at that. We got that in there too. Euro Pound being a little bit of an interesting instrument, to say the least. But just the way it moves around, it's a little tougher to trade. But got a half deviation move today. But yesterday, it looks like we got a 1 deviation move. Day before that, we got 1, went down to 1.5, came back up to 1 before the close. Day before that, flew right up to the 1 and then moved on up to 1.5 to close out on the day. And we got a 1 deviation move the day before that. So day after day after day, giving us really accurate ranges of how far the market is going to move on each day. And again, we just added those pairs in there so we can keep up with the Nadex pairs being added on. Now, let's see here. We also got the Pound Yen. We discovered that one. Moved up, like I said, 1 deviation perfectly on the day. And let's check out the Pound Dollar. So on the Pound Dollar over here, we got to move up to a deviation within a few ticks of the 1 deviation line, but definitely hit that 1 deviation low to high. So always keep that in mind, that low to high. Easy to forget, but really helpful if you're trading. And then for trailing stops, for targeting, for looking at potential reversal trades, things of that sort. We'll go on over at the Dollar CAD. Dollar CAD's moving on down and working right now towards potentially hitting the 1 deviation mark. We'll see. It's pretty close. I'd really not a low to high on this one. So it really didn't even break the settlement price there. So it's almost a 1 deviation move. We'll see where it ends up before the day's over. And then we got the dollar franc. See how the Swissy's doing over there. Swissy moving on up to 0.5, down to negative 0.5, a little bit lower to 0.7, back up to 0.5. So giving us, again, a solid 1 deviation move. Low to high. Yesterday we got a easy 1 deviation again. So just knowing what to expect, not having these false expectations of the market's going to keep going forever and ever and ever, because this is when you should possibly look at not adding on to a position. This is when you should look at a reversal on a position. Okay? And so I know, my system probably would have still gave me a long right there. All right? But understanding it's at 1 deviation, I'm going to use that to help me out. Okay? And even this way, going down, I'm short. I would have had another short, I guarantee you, on the system that I trade. But I understand we just broke a 1 deviation high to low. That's going to help me out a ton. So let's look over here. We got what other instruments can we look at and how they're moving. But we're getting a solid move. I mean, getting deviation moves across the board on the FX pairs for the day, working out well. And let's see here. So we'll look at the dollar yen. Where's that at right now? It's been bouncing around a little bit. And so we got sort of a bounce between settlement 0.5, not quite back down to settlement, heading back up a little bit. So sort of on the long side of things. We'll see if it keeps moving on up right there right now. And it's just been an interesting little battle going on here on the dollar yen today. Sort of a hard thing to trade just with the flatness it's had this morning during the morning session. Now let's go over and let's check out our energies here. We're going to check out oil. And oil right now moved up to 0.7 before coming on back down. Like I said, it's pretty flat on the day as of the moment. But, you got a decent move, which had, plenty of profit potential in there for you. When it ran up, you'd be tightening your stops. And if you don't know what that tightening stop method that I teach is, it's really simple. And it's basically when the market closes higher than a deviation level. Okay? Whether it be the 0.5 or whether it be the settlement or the 0.7 or the 1 or whatever. When it closes higher, then I move my stop. So if I go over here, I'm long, and I move my stop up, I move it when it closes higher. So this bar closed higher than this deviation level right here. And so I put my stop just 5 ticks below that bar. Okay? This also is a good signal for a potential reversal or choppy market, at least, if the market does break and hit that stop. Okay? Because think about it. If I think there's a low chance of the market continuing to rise if it hits that stop, that means there's probably a good chance it's going to go the other direction. So I put my stop right there. Market comes back down, hits it. Notice I also have a pretty nice volume spike happening. We talked about this morning on the air. Tommy was talking about the volume spikes when we get those off the deviations, one of my favorite methods. And so we got a volume spike. We break the level. We're breaking down right here. We're moving down. Retrace right back to settlement. Spread trade, future trade, binary trade, whatever you want to do, but plenty of trading possibilities right there on that trade. Okay. So looking on over, checking out some of the other stuff that we have, and we can go in, check out silver, where silver's at on the day. Silver, a little bit, started off a little higher, went lower instead of higher like, the other markets have, and we look at went right up there to settlement and spiked right off of that. Look at that spike. Okay. Then you got the volume on both sides being half the amount, and then it breaks below that spike. So how would you trade this? Well, if you did futures or you did spreads, you pretty much broke even on the trade. There's really nothing happening for you. But if you did binaries, you did in-the-money binaries, then you're profitable on the trade as of right now. So trade's doing really well for you. And so you'll be pretty happy with that. But anyway, so in-the-money binaries, meaning, hey, if it stays below this level, sort of like what we're doing on gold right now, then we'll be profitable. Now, let's go in. We'll check out a couple other markets. Just looking across the board. Like I said, we had that gold trade on. Threw that one on a little earlier than normal, but we got some good distance on it. And, again, just had a good a lineup. So going on over here, we're going to check out copper. And, one other metal here on the day. And copper, let's see here. Going in. See, those volume spikes aren't on deviations. Notice that. Okay? And you can use them if you see the retrace. But notice how, one, we had 2 volume spikes versus just 1, and 2, it didn't break down low. We need that bar to break back below the low of the bar after the volume spike to have an entry. We never got that entry. And it basically went up, spiked up, ran out of juice, and just stopped and went flat for the rest of the day. All right, so that's copper for you. Can be a fun market to trade, can move quite a bit. And now let's roll over. Let's check out our indices, because in the next part of the show, we're going to have to go in and catch up on the news. Okay? And right over here on the S&P, haven't even quite got a half deviation move. Keeps moving back down to that settlement over and over again. So you go over here this morning, we get a gap fill. Within like a couple ticks. Same thing again. Third time. Looks like it's moving toward again on the fourth round here. So we'll see how that one pans out. We look at the Russell, and Russell filled its gap, ran back up to it, came back down to it, just oscillating. So it's not a whole lot happening overall today on the indices. And let's check out the Dow. We'll cover the Dow and the NASDAQ when we get back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So going through, checking out the indices right now. We got the Dow right now. Looked like it was going to move back down and fill in its gap, but it has not. It was moving down solid right there. Got a good move. Pulled back to another solid move down, and now pulling on back. So we'll see. But I'm thinking at this point we're probably not going to get that sell-off. And let's roll on over. Let's check out where we're at on the Russell. So on the Russell, we covered the Russell already with the NASDAQ. So on the NASDAQ, we went in, we're checking that out, and it's just oscillating around settlement all day. So it ran up, not even quite half a deviation. We got a half deviation high to low, but, I'm more looking for like 1 deviation moves high to low. And anyways, but it's a lot of flip-flopping around. It's not a whole lot going on right there. Really more of a butterflying instrument for a good chunk of the day because it just hasn't moved that much. And by butterflying, I mean range bound. So you go and you buy here and you sell here. Sort of like what we're doing on gold right now. We can flip back over, look at that trade, let you see that. So we went in and we sold earlier the 1290 contract. Okay, so right here we sold this contract at 1290, saying the market would stay at or below 1290, and sold it for about $20 right there. And you have a couple choices. You can hold on to the contract into expiration, okay, to help you max out that profit, or you can be like, you know what, I think I'll just buy them back. You click there, quick buy. Just buy them back at 4 and eliminate all risk. So obviously completely optional. And but I'm just going to buy them back, lock in my profit, $16, times how many ever contracts you did. On there I just did 5 on that one, so nothing major. But every little bit adds up, right? So you don't need to risk a whole lot to make a whole lot. You just need to make a little bit consistently. And so looking at what we had, if I made $16 times 5 contracts, that's $80. So not too shabby for just sitting here talking on the radio and just doing a premium collection trade over a period of about 20-25 minutes. So gotta love Nadex. So if you could just do that once an hour, right? Not too shabby. And that's without taking any kind of exorbitant risk. But anyways, one of my favorite kinds of trades, again, that's being the simple premium collection trades. And I will use the scanner to help me find those contracts simply by going over, and I saw a trader posting something about gold and, having some good support on it. And I went over, checked out the contracts, all was available. I was like, oh, wow, there's a 1290 available at 20. And I was looking at it, like, wow, look at that. I mean, that's just great. Check out that support right there, or resistance. I'm sorry, that's resistance going on. And then you got these volume spikes right here. You got another volume spike right here. And did a little pullback there and then started moving on back down. Just a solid premium collection in the money trade. And so all sorts of trades that you can do, you can take advantage of, just depending upon, if you're ready for them. So, and if you'll hop on there and you got to be willing, right? So you can't just sit there and analyze all day. You're going to have to, hop in and actually, push the buttons. So there's other trades. There's like, what if it keeps going? You got a 7650 trade. If you pop that up, you look at that. So you can look at a lot of different trades on here to see if they're possible, if they come up. But, of course, I'd have to close below 1287 for a $25 is probably not the trade that you want to do. And you have to enter that before the 2 minutes until expiration. In those last 2 minutes, you basically just get a, sort of a dead market. I call it the dark zone. And it's basically where market makers will stop posting quotes. So they're posting live quotes. It's not RFQ. It's not request for quote or anything like that. They're posting live quotes, contracts guaranteed on each side, best price at that quantity at that second. If you take out everything that they put on there, they'll put more up, But they basically stop posting those last 2 minutes on the binaries. Now, on the spreads, they'll keep posting. So one thing you'll notice if we go over and we compare the two, let me show you this, is if we go up here, like you're not going to get anything really posting here in the last couple minutes usually. Now, the quotes you're seeing right now are other traders just randomly posting. Okay? None of those are in the money. Those are all out of the money. People like trying to get out or, trying to get lucky or, whatever. But if we go over and we check at the spread scanner, I want you to see this. It's a good example for you. And let you see that there will sometimes, so let's get rid of any filters. Yeah, see, they're still doing some quotes down here. I did some strangles earlier, some double binaries, but they're still doing, some quotes. So you can actually still get some quotes on the spreads later into the minutes where you can't get them on the binaries. And that can be helpful for you. All right, stay there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's that time of year again, and our semi-annual Tiger Dollar sale is back. For a limited time only, you can get a 25% bonus on any Tiger Dollar purchase, and included in your purchase, you'll gain access to an exclusive 4-hour live trading event with Tom O'Brien on November 19th called Strategies for Trading ETFs, a live trading event. The only way to gain access to this exclusive 4-hour workshop with Tom O'Brien, which includes live trading, is by purchasing Tiger Dollars as part of this promotion. Tiger Dollars can be used for any TFNN products and never expire, so now is a perfect time to get your 25% bonus. Don't delay, this will be our last Tiger Dollar promotion in 2013, so act today. For all the details and to get your 25% bonus on your Tiger Dollar purchase today while gaining access to Tom O'Brien's exclusive 4-hour online workshop and live trading session specifically on ETFs, visit the front page of TFNN.com today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So we're just checking out where everything's at. And we said our gold trade there expired in the money, or you closed it out and took a nice profit out of that trade. So let's go through, look at, catch up on a couple more markets, and then let's dive into some news that you can use that is coming on up. So we got soybeans that we're going to have this morning. It was right at the deviation when I was on with Tommy. Somebody over in the Tigers Den was talking about, they're like, hey, check out soybeans, man. It is flying down today. And I'm like, it's at that deviation level. It's either going to pull back. It may break. If it does break, it's going to go down to 1290. And it did. It went right down to 1290. Hung out there for about half an hour. And it looks like it might want to move on down now to 2 deviations, down to 1282. We're almost there. So soybeans flying on down. And pretty sweet moves right there. You got to love that. Again, that was the big mover of the day. We were talking about that at the beginning of the show, how it's just been flying. And what if it hit that's 1276? It'd be a very nice payout on that one. And but we were looking at the chart and talking about the move where it could go down to. And I mean, it may hit that today. I definitely wouldn't be surprised if it hit it by Monday. And but I can't believe that move. It's just a solid move. We can go over and check out daily bars. We're trying to look at this. Might be messed up with the deviations on it. Let me pull those off. Right there. And we're going back, and looking at the what Tommy was pointing out was the high volume bar right over here, and just the market, easily pulling back down to about that level, and we're going right down there right now. So, and he was talking about it's targeting for about a 1274 as the sort of the first target zone there, and off that a bounce on back up, and we're obviously pushing right in on that level right now. So pretty sweet call. All right, well, let's go back. Let's check out the news, and let's see what's coming up this coming week that you can take advantage of. Again, I'm going to be out for a few of these days, so I do want to make sure that you're ready. Now, I'll go Monday and Tuesday. I'll be in, and we'll be covering the show, so that way you'll be ready and prepared. But just to get you your general starting list, I want to just make you aware. Things to be aware of. Monetary policy meeting minutes coming out on the Aussie. Not a tradable event, by the way. It may say heavy impact. It is important, but shouldn't expect a whole lot out of that. But again, the monetary policy meeting minutes coming out at 7:30 on the Aussie on Monday. On Tuesday, 5 a.m. Again, it's not a major tradable event, but it will impact the market. So when I read off an announcement, we expect like a 20 to 30 pip move, unless I say, hey, this is going to be a big thing, okay? But German Zoo economic sentiment report coming out on the euro will have an impact at around 5 a.m. And then Tuesday night, Bernanke's going to be doing a speech. This isn't like a big national press conference, but he'll be doing a speech that could cause some volatility in the evening on your Aussie yen pairs, with the dollar, just with having Bernanke talking at 7 o'clock at night. So look for a little extra volatility Tuesday night, all fired off there by Bernanke. And then we're going to have Britain is coming on up. They're going to have their bank rate votes and their purchase facility votes coming out. Basically, why did they vote and who voted what based on the last interest rate reports that came out. That'll come out 4:30. That will have a decent impact right there on the news. Usually we get a pretty good tradable event right there. Then at 5 a.m. we'll also have the inflation report hearing coming out of Britain. So you might want to try to get a like a 6 o'clock, 7 o'clock expiration on those spreads for the pound dollar on Wednesday, just because if the asset purchase or official bank rate votes don't move the market enough, then the inflation report hearings may help push it a little bit further. So I'd probably go more for the 7 o'clock to give time for all that stuff to play out. Okay. As different pieces, come in, and the different votes and the interest rates and the public engagements, and just, there's a lot of stuff that comes out of that report hearing. 8:30, we will have a tradable event there, probably on the euro dollar, but a core CPI, core retail sales, all coming out at 8:30 on Wednesday morning, and then existing home sales will be coming out at 10 a.m. as well. Going on into the evening, FOMC meeting minutes at 2 o'clock. So again, an FOMC day. So that'll be interesting. I'll probably be at the airport trading this on my phone, and this will be a butterfly day. So it's where we go in and we look at the potential range on the FOMC meeting minutes, and we go in and we do butterflies that are going to expire like right before 2 o'clock. And word of the wise, 5 minutes before 2, get out, because people start firing off stupid orders and things start flying around. So usually I want to be out of that trade by 1:55 on those butterflies on the 2 o'clock meeting minutes, okay? And then look for a potential massive move, usually on pound dollar, euro dollar, really just about everything, but pound dollar and euro dollar usually have the best moves on the FOMC meeting minutes if you can find one with an acceptable cost, because I guarantee you're going to see some very inflated premium for 3 o'clock and post 3 o'clock expirations after the FOMC meeting minutes. Now, a way to use this to your advantage is that inflated premium will hang around for a little while, okay? So make sure you're paying attention to like 2:30 expirations on oil, 3 o'clock expirations on everything, okay? 4 o'clock expirations on everything, 4:15 expirations on everything, which is going to be the U.S. indices. But that premium a lot of times will stick around, so check it and see if it's there. If it's there, you might have some great premium collection trades, all right? Let's see here. Japan is going to have a monetary policy statement coming out sometime on Wednesday, listed conveniently as a tentative time. However, in reality, we just look at the past to help predict the future. And by doing that, we can see that came out at 11:15. And that was actually a really late report for that to come out. Usually it comes out about 9:45, so 9:40. So somewhere between 9:40 and 11:15, that monetary policy statement could come out. So just be aware. And again, that's a very late time. That may have something to do with the time change. So would that be more like at 10:15? So we may be looking more at a accounting for time changes and everything else. We may be looking at somewhere around 10 to 11:15. But just to be on the safe side, 9:45 to 11:15, expect the yen monetary policy statement to be released. So that way you can take advantage of some movement on that. Not so much especially since it's not timed, but not so much a measurable event as it is a moving event. It can work out really well. And then we get the Bank of Japan press conference coming out after that. So you can have one trade, and then you have another one following up right after that. And with the 24-hour binaries, I mean, you can go and you could trade the 7 a.m.s. Looks like 224, 220, 240, 230, 240 have been the times that one's come out. So probably the last one was just sort of a fluke with that 11:15 because I'm not noticing any inconsistency on the press conference. So the press conference somewhere around 2:30 on Thursday for the yen coming out of Bank of Japan for their monetary policy. And so, again, look for that to cause some good volatility, some good trading opportunities for those who are up that early in the morning. I will be asleep. Looking a little bit further, we'll have a German flash manufacturing PMI at 3:30. That'll cause some euro-dollar volatility, maybe 20, 30 pips. At 4 a.m., the RBA governor there out of Aussie is going to be speaking. And big economist dinner, it's an annual dinner. Probably will have some impact on the Aussie, but not so much a tradable event. Let's see, we're going to have PPI. These things are still coming out late. This one's out 7 days late from the government shutdown. It's like, get your stuff together. But PPI, release date delayed by 7 days. And that one is going to come out at 8:30, so definitely a tradable event. Unemployment claims will come out at the same time. And then at 10 o'clock, we're going to have the Philly Fed Manufacturing Index. Rolling on in to Friday. Next week, we're going to have the core CPI, core retail sales, CPI retail sales, all these coming out of Canada. That will cause some good volatility. We'll probably have a nice USD CAD trade. So I'll get you the stats for that early next week so you can be ready to trade it. Okay? Now, that's what we're going to be looking at. That's what's coming up. But, obviously I was out for a few days, and we had some decent news come out. So could help to look at some of this and to sort of see, what are some of the major impact news reports that I talked about, because I told you about these on Wednesday last week before I headed out. And we had some nice releases. So let's check them out. We'll go in and look at each one of the reports to see what kind of moves we got on them. And let me make sure I'm loading back enough data for us to check everything out. Don't need that much, but let's throw some data in there. And let's try to keep it to a minimum. It makes everything load faster. So, all right. So we'll go over here, and we're going to check out, last Thursday we had the interest rate coming out of, now this is what we're about to get, the monetary policy votes and everything is going to be coming out this week, the ones that I was just talking about. We had the interest rate decision. That one came out last week on the 13th there, right? So right there, the 7th. Okay, so on the 7th, yeah, right over here, we go in, zoom in on this. You can obviously see where the report came out right there. You see that big move. And we're going to move right before the release. There we go. Moved on down. Got about 43 pips down. And then got about 19 up. Got a range, high to low, right there of 58 pips. So how does that do in relation to our expectations? Not completely off of what we were looking for. And having those expectations helps you. So I need to be looking to bell on this. But again, a lot of times what we're looking for, especially on like interest rate votes, okay, we're looking for a move pretty fast in the direction that we want. If we don't get it pretty fast, like in those first 5 or 10 minutes, we might be looking to bell on the trade as quickly as possible. And by bell, that's why I usually use straddles, because a lot of times I can bell at a break even on a trade. And so on that trade right there, you're going in, and let's see, we had a couple different ones come out. But so that trade would have been one trade you could have looked at, potentially hopping in and getting out. It really, again, did not have a massive impact. I was surprised that we actually got the move that early on that report there. Let's go over, that was the 6th report, and on the 6th, we had, that's the manufacturing production. Okay, so on manufacturing production, we got about 40 pips. If we go on over here and we look at our next one, which would have came out at 7 o'clock for the actual interest rate vote, had that a little backwards there. On the interest rate announcement that came out, we got to move at 7. Notice we really didn't get any kind of impact when this first came out. I mean, it was dead. So, and let's see here. I'm just trying to, maybe I have a gap. There's like a gap there in the data. Anyway, so I'll have to pull that one back up. I'm just going to skip it because there's a issue right there, I think, with how I have my chart settings built in. Okay, let's see here. Go to data series, get this, and update it. Anyways, the biggest thing I want to be able to do for you today is I just want you to start testing out these straddles and strangles. And they don't have to all be at 4:30 at night. There's plenty of them that are in the evening and the afternoon. There we go. That's a little cleaner looking chart. And there we go. Okay. But, I mean, you need to go in, just practice, just throw some on. And you don't have to do it with live money, okay? Go in and just demo it. You'll see what I'm talking about really quick. And you'll be amazed by the impact that you can have on your account just from trading these trades. But I mean, again, how do you demo trade it? What do you do to go in on it? And what I'll do is I'll go in, I'll find a report, like say, the Fed funds rate or, whatever. I'll call out the different reports for you to look at. And I'll pull up the spread scanner. And then I'll select my currency pairs. Okay? So let's say that my currency pair is the pound dollar. And then over here on the pound dollar, what I'm going to do is I'm going to go, okay, well, I want to have like a 1-to-1 or better risk-reward ratio. That's usually all I need. I can even go in and throw in like a $100 max risk. And then I'll scroll down and I'll find which ones have similar floors and ceilings. So I'm going, okay, this one has a floor of 6,100. This one has a ceiling of 6,100. There is a trade I can do. It's 3 o'clock. That's perfect. No reason for me not to do that trade. It only has a $15 risk. If the market moves up or down, basically 15 pips, then I'm going to be profitable on this trade for every pip it moves after that. Okay? That is it. It really is that simple. If you'll take advantage of this, if you use the scanner, it'll make finding these spreads. And then all you do is you just click the button right there, click the buy, click the sell, and what it did for me on the other screen is it opened the tickets for me. And, of course, you can, place your order when you're ready. So, but, I mean, it's that simple. And then as soon as you got the position in, then you put in your working take profit order. And we actually just I just got off the phone with one of our other programmers that we're working on. Doing another piece. We're going to be adding in stop orders and OCO orders into the ticket functionality. It'll happen not only in the pop-up tickets, but also you'll be able to do it from the working ticket panel. And so the new functionality shall be coming hopefully very soon, within the next, ideally 2 weeks or so. And putting that together so that way you can start doing stop orders and OCO orders on Nadex using the scanner. All right, stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So just looking across the board, checking everything out, talking about the news, and wanting to make sure that you understand how to take advantage of a straddle on the news. So what we do is we go in and we simply pull up the scanner, we choose our market, we'll put in like a $100 max risk and a 1-to-1. Now, when I say $100 max risk, I always mean on one straddle, one contract total. So if we go down here, we're only talking about like a $15 risk. And something I like to point out that is amazing, people don't see it, but I mean, you got 4 minutes. Okay? You have the same floor, the same ceiling, you got a few dollars risk right there. Obviously, you need the one that has time. You need the one that has 64 minutes. So always look and see if you have the best possible straddle for the day selected whenever you're doing these trades. Okay? And but that definitely would be the best one if you were looking for a trade right now to put on in there and to put on as a straddle. Because if you're able to do the straddles, then you can go in, and what I'll do is I'll leave the other side on and I'll set back and take profit. You saw, I'll have some trades up here. I'll put on a buy, I'll put on a sell, I'll put on double binaries, I'll do all sorts of stuff. But I mean, I can put on a straddle. One side takes off, it makes money. Then like on the Dow, it flies up, that profits. You put a sell on, it comes on back down. If it makes money, great. If not, you're still covered from the money you made on the other side of the trade. So let's say if I risk $20 on both sides. If I go in and I make 60 on one side because it flies up, now let's say if I expect to lose on the other side $20, but I made 60 on one side, lost 20 on the other, so I netted a $40 profit on a $40 risk. And then if the market does turn around, okay, then I have the potential to make back that $20 or make even more. Maybe make, 40 or 60 on the other side or 80 on the other side, depending on how far it goes and how fast it moves and, when it hits that take profit level. So looking at right now to sort of seeing if there's anything else. We got oil. Looks like it's moving on down. So we could have a potential setup for just a short oil contract going into the 2 o'clock expiration. So if you want to check that out, oil's sort of been oscillating up and down a good chunk of the day here. Let's pull it up, look at it. For just one more potential trade on the day. Let's see what we got. We got the 2 o'clock coming up. And you need a pretty decent little move down. I don't really see much at all happening on the in-the-money contracts because there's nothing just sitting right there at the strike. So the closest you're going to get is something like right here, like a 93.76. But you only got a few minutes for it, so it'd have to move down another like 10, 15 cents. It's basically right at settlement is where that contract would have to close for it to be profitable. So pretty low probability with only a few minutes to go. Probably would not suggest that trade. But keep watching because we could have some good opportunities coming into the close of the session for oil. Oil, again, the pit session closes at 2:30. Always make sure you're aware of when those pit sessions do exist, okay? Because, basically they can make you a lot of money if you understand the pit sessions because you'll go in and you'll see just a lot of volatility volume spikes that can be really useful. Also, things will get a little bit more haywire. I don't do my normal trend trading, etc. in the last half hour on the oil pit session because things don't act normal, I guess you could say. You'll see things go a little bit, just off. And but yeah, you can see trades like that where you put a $7 risk in. If it does expire below it, you're talking a $93 profit. If it expires at or below 93.76, there are some ways to do that trade that actually increase your probability, and maybe we'll talk about some of that next week. And I call those ETC trade setups. So, all right, y'all have a great day, and I'll see you here. And stay tuned. We have another great show coming up for you right after this.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.